In this brief clip from today's halftime report, Josh Brown and other guests discuss their market insights. Stick around for my technical analysis of the markets in the final segment of the video.
And welcome everybody, of course, to the halftime report, where we have the S&P once again on the move higher and closing in on a new record high. We're not that far away, in fact, for a new record high for the S&P. We're just shy of 5,900. What a remarkable turn of events, Steve, that it's been. Yeah. And taking this next leg higher as we did on the events of the weekend. I'm really curious to get your point of view for somebody who's been overwhelmingly negative on this market. You've had a number of people come out today and say their recession projections are far less than they were just last week. Are your own?
They are, but let's keep in mind what I've said consistently over the last couple of weeks. Short term, I'm bullish on the market. My exposure reflects that since I have virtually no cash. It's the intermediate term that I was concerned with, and that's where the recession comes into play. So you do have to modify your forecast if you've been looking for a recession, as I have been. And again, it's not getting to the recession, it's the journey there of a declining economy.
And you don't think that trajectory has been significantly altered as a result of what happened on the weekend? How could it not be?
I do. I absolutely do. So, which is why, I'll hold on to this exposure for a while. Look, we're back to a situation where the market is I would say, testing valuation limits. It's pulling forward what you're going to see in the tax cuts. So you'll see CapEx spending. And let's face it, it was a major surrender by the administration, after going to, ridiculous tariff levels and coming back to basically where we were with China and with the UK. And I would expect to see them giving up, the ghost again on the other deals that we see. So you do still have this temporary pause in CapEx spending that's going to impact the second quarter. But I do think that at this point, you're likely to look through it. Inflation will spike because tariffs are there, but I think you're likely to look through that too. So what I've done is, as I mentioned, I did put on the indices more QQQ than VOO, which is the S&P. Going back into some of the old favorites because I know them. So when you're looking to put exposure on quickly, you go to what you know, where you've done the fundamental analysis and where you've been comfortable with it. And look, just as an investor, you can't get stuck in a position and a viewpoint. So I'm pretty much fully invested.
Josh, Ed Yardeni raises his S&P year-end target. He was at 6,000. Remember, he had taken it down, and maybe he did so a couple of different times. The goalposts, though, seem to have changed for many, including him. 6,500 is where his target is now. I said we're pushing 5,900. It seems as though there is a decidedly different level of optimism today than last week. Offense takes the field is what Piper Sandler today says. Wells Fargo says ceilings now become floors. Expect dips to be bought.
I mean, is any of that helpful? They're just marking to market. Like the stock market crashes and they all cut their targets. Then there's like talk of a détente or another 90-day extension, and they raise their targets back. Like we're going to go from 140% tariffs to 30%. Oh, well, then I take off my recession forecast. I mean, like anyone can really do that. So I try not to get bullish because the strategists raise their targets or get bearish. They're doing their job. They're marking to market based on what everyone already knows. And I get it. It's just not particularly helpful. The number one thing and the number two thing.
Be helpful.
Well, I'll be helpful. The number one thing and the number two thing. Number one is the inflation fight. We're winning. You got CPI came in at 2.3% year over year. The expectation was 2.4. Doesn't sound like much, but can you imagine how much of this rally we would have reversed on a 2.6 print? Like, it would have been gross. Now, I'm aware, and Weiss is probably dying to say this, so I'll just say it. I'm aware this may be the final tame CPI report before the effect of the tariffs so far. and we'll get that report about a month from today. I get it, understand, but still, this is the lowest year-over-year inflation rate, according to CPI, since February of 2021. That's important thing number one. Important thing number two, 90% of the companies in the S&P 500 are now in with their actual Q1 results. And let me tell you something, 78% of them beat earnings. This was a very, very, very good quarter considering all the stuff that's been thrown at us. That is above the 5-year average of 77% and above the 10-year average of 75%. So just an exceptional showing from the 500 best companies in America. When you look at the 90% that have reported and the 10% still to report with expectations, you get a year-over-year Q1 earnings growth of 13.4%, almost fully in the books. It's the 7th straight positive year-over-year quarterly earnings report season. And I have to tell you, if you have CPI falling and earnings continuously surprising to the upside, almost every sector, that's more important than somebody saying, you know what? I was thinking 5,200, now I'm at 5,400. I just don't know how that helps anybody. What I'm saying is helpful.
Okay, Amy, it's not really about the targets at all. That's not the reason that we bring up what strategists are doing or what they're saying or what they're thinking. It's about the overall tone. It's representative of how the tone in this market has changed.
Yeah.
And it's changed dramatically from Friday to today. Here we are just Tuesday, and we're 4% away from a new all-time high on the S&P 500. That's the point that I'm trying to make, no other.
Yeah, no, I agree with that. Certainly, there's a lot of optimism coming back to the market. It was just unambiguously good news that we have a new deal and a 90-day detente. The two things that I'm really looking at for this market are how much did the tariff war, trade war, pull forward economic activity, and how much does that have to still seep through into earnings? As Josh said, Q1 earnings were very, very good. Now, and we have like a 6-week window until we start focusing on Q2. But people might start getting nervous about Q2 depending on what the level of tariff pull forward was, and we really don't know that. Companies don't know that. And then we have the tax bill, and that's going to be a fine line. I think people are optimistic about it, but it can't be too stimulative that it impacts yields negatively, and it has to be stimulative enough that we get the economic benefits that people want from it. So it's a fine line with that tax bill, and those are the two things that I'm really watching to see how the rest of the year sort of unfolds.
I feel like, Jim, the whole idea of the pull forward was viewed as a potential negative last week, but now it can be, I think, almost written off as understandable and excusable. That, okay, there was a moment of dense fog and a lot of demand was pulled forward, whether it was orders from companies, whether it was purchases from consumers. And now if there's a momentary correcting phase in all of that because the environment is viewed as more positive, so be it. I think people will look through it.
I agree with Amy's premise and your conclusion. I agree there probably is some pull forward over the last several months. And I don't think it's going to matter, Scott. And I don't think that the economic slowdown that may be the result of damage done over the past few months is going to matter either, as long as trade deals continue to come in. Steve, you and I have spoken enough times. I think I know your position that they are paper at best. I will say that the market's going to key off of them, and more importantly, corporations are going to key off of them. So far, corporations have not laid people off. We see that in the weekly jobless claims. That's the thing that I fear the most, is that CEOs who have been on hold so far start to pull back, start to lay people off. They're not going to do that if profits remain good, which they have, as Josh said, in the first quarter. Amy, you're right, they may come down in the second quarter, but I think the markets and CEOs are looking forward into 2026, when right now you're projecting 14% earnings per share growth.
Big story in the market today remains the NASDAQ, which seems to be at the epicenter of the better feeling within the market. Tech, chips, software. The NASDAQ today is up 1.5%. It's back above 19K. It's just about 6% off of its all-time high.
Okay, so that was Josh Brown, Steve Weiss, and a few other guests on the halftime report. And they're all starting to get a lot more bullish in these markets. And Yes, some of the indices are looking pretty good, but there are a few that are not quite there yet, one of them being the Dow. I'm going to go a little bit more in detail about that in a few minutes. But let's first take a look and see how the market's performed. It is after the close right now. It's 5:01 p.m. It's Tuesday, May 13th as I'm recording this. And the Dow was actually down today, 0.64%. It did not do as well as the other indices. The NASDAQ was up 1.61. S&P 500 was up 0.72, and the Russell 2000 was up 0.37. Let's take a look at the, this is the sector rotation here. The strength and day performance of each of the sectors. And you can see technology up 2.16%, energy, consumer cyclical, and communication services were the strongest ones. And then healthcare, real estate, consumer defensives did not do as great, obviously. And there's the 1 week performance for you. Now let's take a look at the map. Also, that's a really important thing. So this is the heat map, and this showcases each of the individual stocks within the S&P 500, how they performed today. You can see Nvidia up 5.63%, quite a bit. Most of the semiconductors did well. It looks like QCOM was down though, 0.5. The healthcare stocks got hit again. Right, look at all the red right there. And then the consumer defensives are all red there. Utilities didn't do so great either. Basic materials, same thing. Real estate in the red, mostly. Okay, but the energy stocks did well. Interesting. Tesla was up 4.93. Meta was up. You can see Oracle. Microsoft just was actually down today. Down negative 0.03%. Let's look at the 1 week performance so far. And you can see that, yeah, the technology stocks are doing pretty well, but yeah, the healthcare stocks, not so good. And Google down for the week, 2.61%. The telecom services also got hit this week. All right, let's look at some of the news, guys. S&P 500, NASDAQ, and higher on soft inflation data and trade optimism. So that is really good. Yeah, basically the the April CPI was at 2.3% year over year versus the 2.4% estimate. So that's positive. United Health today sank as the CEO stepped down. The company suspends guidance. And yeah, his name is Andrew Whitty, 60. He stepped down from his role for personal reasons Tuesday. And the company is suspending its 2025 guidance. The CEO, the former CEO, Stephen Helmsley, 72, is taking the helm. Some other news here. Stock market today. S&P 500 wipes out the 2025 losses as NVIDIA powers tech rally. And Coinbase, it jumped 22% today, heading for the biggest gains since the post-election pop on S&P 500 inclusion. All right, let's take a look, guys. And so we're going to first start off with the Dow Jones DIA ETF here. And as you can see, it's down 0.64%. It's not doing as well, right? It's not doing as well as the other indices. And the question is, why is that, right? So it, unlike the other indices, as well as I'll show you in a few moments, it has not broken through some levels. This prior high right here has not been taken out. As you can see, we're still under that level. And the other problem is yesterday, when we broke into the cloud, we stayed inside the cloud. Today, you can see the price actually, it gapped down a little bit this morning and then stayed under the 200-day. That's the 200-day moving average is that little dotted yellow line that you see right there. So that's kind of interesting. And here's, I think I have some trend lines here. Yeah, the next target area might be somewhere around this area, around the 428.60 level. So it might find some resistance right there as well. How about FEZ? That's the Eurostoxx 50 ETF. This one, like I said yesterday in yesterday's video, was looking the strongest out of the bunch. And the reason I say that is because it's not just strong on the daily time frame, but also on the weekly. And that's really important. Personally, I like to look for stocks or ETFs that show strength on these two time frames, the weekly and the daily. And basically, I won't take a trade if both of those are not looking good on those specific time frames. There's so many other options out there. You don't have to trade everything, right? Look for the strongest. And so when you've got strength and momentum increasing in a specific, in these two time frames collectively, you'll have a higher success ratio as far as probability of wins. Okay, now you can see yesterday on Monday. I'm sorry. I got to go back to the right here. This is the daily chart. Yesterday on Monday, May 12th. All right, we had that bullish candle, and it 2 days above that 57.67. Now it's continuing. That's exactly what we want to see. The FEZ, in fact, is hitting all-time highs as an ETF. It's never reached these levels before. So the Euro stocks are still really in a strong position, and I'm very bullish on that. So IWM is the Russell 2000. Check this out. Notice where it stopped. Right at that 209.27 level, based on a level that I shared with you guys yesterday, these prior highs, right? So price sometimes can find, when it comes back to a level, prior level of resistance or a prior high, that's where you'll find a lot of sellers coming in and basically holding it back from moving. And so the other indices like the Qs and the SPY were up, but you can see even the Russell 2000 was up 0.37%, but ultimately it actually developed quite a negative little candle. That's called the spinning top, and that's not really that positive, honestly. I wouldn't be jumping into this ETF quite yet. One other thing I'll also mention is if you look at the weekly chart here, we're still under the Ichimoku cloud here on the Russell. And on the Dow, we are above, but the Tenkan-sen, the faster moving average, the green line, is still under the slower one, the red, the 26 period. So we also have the Chiku span. We're using the Ichimoku indicator, by the way. And what we're looking for is price essentially to be above the cloud like it is right here. We want that faster moving average above, like it was back here, above the red line. Right now we have a negative crossover that's occurred. We want that white line, which is the closing price, today's closing price, or that's a weekly chart we're looking at. So we want that to be above the candle 26 periods ago. It's projected 26 periods into the past, as you can see right there, and that's not the case yet. We don't have that. So Dow is not there yet. On the daily time frame, the Dow does show some strength, though, with the Chiku span crossing above the candle for the first time. You can see that's 2 days in a row now. When the Chiku span was under, that was bearish territory. Typically not a good time to be entering. Now there's some signs of life, basically. So yeah, Russell 2000, it's out of Qs, the QQQ ETF, looking very strong. Let's look at the weekly chart on this one. The cloud itself, the future cloud. Okay, so the Senkou span A is still under the Senkou span B right here, that purple line. So that's not a bullish place to be for the weekly candles. I'm sorry, for the weekly chart. And one other thing that you'll also notice is that the Tenkan-sen, the faster moving average, is still under the red line, the slower one. On the daily chart, things are looking much more bullish. If you want to be more active as a trader and you don't mind trading these shorter time frames, like the daily and the 2 hour, okay, you can certainly switch it up. Everyone can make their decision about, making their decisions on different time frames. Some people don't want to be, making daily trades. The weekly and the daily, for me, are the sweet spot, but the daily and the 2 hour can be really good if you want to be early on a trade. So like if we look at the Qs, we got a buy signal on the daily time frame yesterday, Monday, May 12th. If we switch it to a 2 hour time frame, you'll see that, okay, we're seeing a continuation here. Very strong uptrend on the 2 hour. And let's take a look at the SPY, S&P 500, above the Ichimoku cloud for 2 days now. That's very bullish. Remember April 2nd was the big day, the announcement of the tariffs. We are now above that level. Remember I said we needed to get above that specific candle that I've got circled right there. It was important because it's a reference point in time, right? This was a major event. It's what led to the stocks dropping. And now since then, we can see the strength that's come back into the market here. And now finally we're getting above the Ichimoku. We're getting a little bit more confirmation that it's, safer, a safer place to be, basically, right after this decline, this downward channel. Here's the weekly chart. We're also above the cloud on the weekly for the S&P 500 for 3 weeks now. But not all of the elements are quite bullish yet. Like I said before, you'll notice that the cloud itself is still bearish. Chico span is still under the price right there, and we've got the faster moving average under the slower. So this is still early, basically on the weekly time frame. On the 2-hour, very strong. Okay, and then we've got TLT, the 20-year Treasury bond, showing a little bit of strength on the 2-hour, but on the daily time frame, still dropping. It looks like it's finding some support at these levels right here, around the 85 level. So we'll see if it really needs to hold up above these levels. You can see this little support area right here. It goes all the way back to January of 2025, where price came right down there, found support, and bounced, right? And so it might come right back again, and then we'll either see a bounce or we'll see it break down. And if it breaks down, the 20-year will be pretty negative, actually. Here's the VIX. VIX is the volatility index, represents basically fear in the markets, and it's dropping. That's really important. It's down 0.92% today. Not a huge drop, but it's still holding under the Ichimoku cloud, under the 200-day moving average on the daily time frame, and that's a positive. The number now is 18.22. It's more conducive to a bullish market when the VIX is dropping. We want that inverse effect, right? When the VIX is dropping, this tends to lead to a move up in the markets overall. A couple of other things I'm going to cover today is the GRNY ETF. This is Tom Lee's ETF, guys. Tom Lee introduced this one through FundStrat on November 7th, 2024, not so long ago. And it didn't, it basically was kind of flat for a little bit. Up until like February 24th, it kind of stayed around that level. But then we had that big drop, obviously, in the markets. And in April, it dropped, in just 4.9 months, it had dropped 25.78% in that 5-month span. But since that time, since that low right there, where it reached that low, it has now jumped 39% in just 1.2 months. So that is a big up move here for the GRNY large cap ETF. Looks pretty good on the daily time frame. Let's look at this on the weekly. Notice how the Ichimoku cloud is still forming on the weekly. It's because it's so new, right? There's not enough data here to populate the actual indicator, the Ichimoku. That's why it looks a little strange. But from what you can see here, we've got like an up move here for the last 6 weeks. And then one other request from our members, TSSI is the ticker symbol for TSS Inc. It's a technology sector. It's in the technology sector. It's information technology services. We are currently looking at a weekly chart, and you can see that price has declined quite a bit here from the top, around the 18 level or so, all the way down to $9. But right now, it has found some support right at the Ichimoku cloud, and you can see that it actually gapped up from that level to there, got above the Ichimoku cloud there, and is still above the Tengen-sen. The only problem is we don't have all of the elements of Ichimoku, once again giving us a buy signal here. We've got the Tengen-sen here that crossed under the red line. You can see that crossover that took place, so that's usually a bearish signal. The other thing that you'll also notice, if we look down over here on the left-hand side, again, the white line is the closing price, right? We're looking at a weekly chart here. The closing price basically going back 26 periods ago, and it's still inside this candle. It's not above it yet. And that's the weekly chart right there. You can also notice that the future cloud is starting to pinch in there. The single span A is getting closer and closer to possibly crossing under. It's hard to tell exactly what's going to happen. We're using the directional movement index down below. At least this is still looking pretty positive. So there's a possibility here for the TSSI to move up. It certainly is looking bullish this week. It's up 10.21% today. Now, let's look at the daily chart. Okay, so on the daily chart, we don't have a buy signal. I know it's starting to look a little more bullish because price did, in fact, cross above that 200-day moving average that you see there, that dotted yellow line. But it just entered the Ichimoku cloud. One of the rules of the cloud, the indicator, it is a rules-based system. And so if price is inside the cloud or under the cloud, it's usually a no-go, right? It's not the best time to be entering a long position. You want to wait for that breakout, like back, we can go back all the way to, back to 2024 here. We could see price got above the Ichimoku cloud, and you had that nice big run. We're talking about a good move, about 2,100% or so in 9.4 months. And this is a very volatile, okay, very volatile type stock, folks. There aren't that many employees in this company, so just understand that, okay, about if you're thinking about trading. This is more, I think, it makes a little bit more sense from a day trading perspective, if anything else. If we look at the 2-hour time frame, you can see that it has popped up, but you can have some big declines. Look at this 2-hour chart, for example. If you can see how in just that short span right there, that's a 38% drop in 15 days. Right here, it's also 39% in 12 days. So you can have big drops. Right now, we're in the beginning stages. If you're looking for a high beta type, it's not even that high. The beta is 1.29, but because the price is so low at $9.07, when there's even a slight price increase, going from $9 to $10, it's a pretty big move. So right now, would I be adding a position here? No, because it is inside the cloud currently. And as I mentioned before, I like to use both the weekly and daily to give me basically the okay to consider entering a new long position in any stock or ETF. Now, I'm going to be coming out with a second video later today where I'll go over the Fab 7 stocks. All right, we're going to go over the sectors too. So you may want to look out for that in a little bit. And if you want to support this channel, one way that you can do it is by becoming a Blue Cloud Trading member. There's two ways you can do it. One is the free way, which is just subscribing. Hit that subscribe button, hit the notification bell, share this video here with someone that you know that might be interested in learning about trading, or maybe they're an experienced trader and they just want to learn about Ichimoku. That's one way to do it. Number two, I do put out member-only videos where I go over my entire portfolio. I share, trade ideas for every week and with the members. And in order to do that, you would hit this join button, which is right next to the subscribe button. A lot of people aren't aware of these memberships that exist in YouTube. They feel like joining is the same thing as subscribing. It's not. Two totally different things. So if you click on the join button, this little pop-up will happen here, and basically what you'll see is the 3 different tiers. You can become either a Blue Cloud supporter, Blue Cloud trader, or Blue Cloud legend level member. So different perks for each one. Under Blue Cloud trader, Blue Cloud supporter, you'll be saving this channel from going out of existence by supporting the channel, and Blue Cloud trader would be a good one also, because under this membership, you can access the member-only videos that I do. And then Blue Cloud Legend level membership, not only do you get the member-only videos, you also get some other day trading videos that I've recorded if you're into learning about day trading, and then as well as daily trade updates, which are posted not under the community tab as it says right here. I've got to update this. It's going to show up, are you ready? Either here under posts, and I'm going to switch this over to this so you can see it's either, once you become a member, it's going to look a little different. You'll see membership pop up, and then you click on that. I believe it's either membership or post is where you'll find those, okay? Either one of those two. And then you can access those trades that I place as a legend level member. So, plus there's some stuff in there already. You guys can check them out if you want. Thanks for watching. Thanks for supporting the channel. Appreciate all of you. I'll catch you all in the next video.